As an accountant with years of experience working from people from all walks of life, I've seen the habits that separate the rich from the poor. But the good thing is, it's not rocket science. So today I'm here to explain to you what are these key habits that you can put in place to help you make that leap from poor to rich. The first one is their knowledge of money and the knowledge that's around them. So a lot of people's first introduction to money is through their parents and then the schooling system. But this isn't created equal. Not everyone gets that same level of education from both parents and the schooling system. I'm sure there's been studies done on this, but my theory is that if your parents are good with money, they're giving you a better chance to be good with money. And obviously if they're poor with money, the same happens. Now, just because your parents are poor with money doesn't mean you have to be poor with money. But it puts it back on you that you have to go out of your way to educate yourself. Now, the schooling system is there to help, but there's so many arguments. And I'm sure you'll probably drop a comment and go, yeah, well, the schooling system sucks. It never teaches us about money. So then the onus becomes on you as the individual to go, how are you going to educate yourself about money? And a lot of it comes to who do you surround yourself with? Do you surround yourself with people that are successful, that are good with money? Or are you surrounding yourself with people that have no money habits, whatever, and are spending all their money? That is a key difference between the rich and the poor. This knowledge leads well into the second thing, and that's knowing where you're at all times. So wealthy people understand their financial position at all times. Now, what they deem as important is going to vary between people. Some people want to track a budget on the daily and really know how much of their money is going where or how much income they're earning. Others might just be tracking their net worth on a monthly or annually basis. But the key similarity is they all have some idea of where they're at all time. A lot of people that are struggling financially don't even know they're struggling financially because they have no idea where their finances are. They have no plan. Whereas people that are wealthy typically have a well thought out plan. They're not thinking tomorrow. They're thinking 5, 10, 15 years in the future. They know what income they're generating. They know what expenses they've got. They know their saving rates. They know what their plan is to increase their net worth. So it's not just about knowing it, it's about having a plan to improve your wealth. The third one is looking for ways to increase your income. I think this is really important, and I've done a full video on it, so go and check that one out. Because looking to increase your income in the long term is going to beat cutting expenses. There's only so much you can cut, but increasing your income technically has infinite possibilities. This is probably the key secret to wealth creation in the long term, is you have to be able to increase your income. I think a good example of that is someone that's got a savings rate of 10%, for instance, and they're earning $100,000 a year. That's going to allow them to save $10,000 a year. Now, that same person that's getting double that, so they're getting $200,000 a year, even if their rate is still only 10%, suddenly they're saving $20,000 a year. This just shows that you are very limited on what you can do if your income's not increasing. If you're stuck on the same income year by year, if the cost of living going up, as it is at the moment, you can't really get much extra wealth unless you luck into a great investment or maybe you inherit some money. You're very limited to what you do. Whereas if you're looking at ways that you can increase your income above what inflation is, it gives you that infinite growth of wealth. The next is taking on bad debt and understanding that not all debt is created equally. You might have heard that saying before, but not really understand what it means. And what I'm trying to say is that not every debt is the same. We have tax deductible debt, non-tax deductible debt, for instance. So obviously, if you've got a debt that's tax deductible, well, that's going to work in your favor more because you can claim the interest. Whereas the non-taxable debt, you're not. Now, this is going to differ country by country. But, for in Australia, for instance, our personal homes, the home we live in, doesn't have tax deductible debt. So this debt may be deemed as bad, but it's not the worst debt out there because people do want that security of a house to live in. But we do have really bad debts, like consumer debts when you're putting stuff on a credit card, for instance, and potentially paying 16, 17, 18% interest rates for goods that you could have purchased with cash, for instance. So understanding, is this a good debt or is it a bad debt? A real good way to look at is, what could have I put that money towards instead? Sometimes it makes sense to take on debt and you can leverage yourself and get things that are going to help you further your position. But sometimes it doesn't make sense. Sometimes it might be just worth saving, especially for everyday items like maybe furniture or phones. You might want to just save that money rather than taking on these high interest rates. Now, if you're running a business, it might make sense, for instance, to finance a car. Maybe those funds could be used to further your business in another area. Or maybe the interest rate you're getting is so attractive that you could invest that money elsewhere and get a better return. So by really understanding good debt and bad debt, it will really help you increase your wealth. It's very clear that the wealthy understand taxes. I think there's a lot of people that go, is that the trick? Is understanding taxes the trick? And it's definitely a part of it. They really know how to take advantage of every legal loophole that there is to further their wealth by reducing the amount of tax they pay. This happens in two ways. First of all, they're thinking long term, so they're understanding what structures work best for what they have, whether they're running businesses or they've got investment properties or maybe they've got investments in shares. They know the best way to structure this so that their family group can increase its wealth in the long term. So they're thinking that long-term mindset again. They're not just thinking what's going to work best this year. They want to know what's going to work best for them in the next 10 years. The other key thing when it comes to understanding taxes is they understand their own position really thoroughly. So whether they're a business owner or whether they're an individual, they know the things that they can claim. They understand what's taxable, what's not taxable. And therefore they can take advantage of this. They can make sure that they're timing investments or timing sales correctly. They can make sure that they're spending at the right times. They can make sure they're capturing all the right receipts because they know their situation well. It's what the wealthy do, and this is what I keep talking about. They understand their own situation really thoroughly. Hi all, it's Ethan from editing here. I realize I completely missed step 6 when recording this video. So here it is, and it's understanding the value of your time. The wealthy really do understand what their time is worth. They make sure that if there's a task that they don't want to do, they pay someone else to do it. So if you're running a business, make sure you understand where your time is going, where you're making the most money per hour, and what tasks are not making you anything at all. And is there a way that you can outsource that to someone else? Is there some administration you can get in? Is there a video editor you could get in? Make sure you do the budgets on it, but that is what the wealthy are doing. They're really analysing every aspect of their time. This may even flow into their personal lives. For instance, if they hate gardening and they know they can pay someone $25 an hour to do it, they might just go and do that and then go and do an extra hours of work where they may be earning $100 an hour. So it's by understanding your value of your own time, they're really able to get a jump on people that don't understand that concept. The 7th one is they understand investments and they understand why investments can help skyrocket your wealth. We've talked about increasing your income, so that's a great way to be able to save more. But what are you doing with those savings? Are you investing them into businesses, into property, into shares, into crypto, into alternate investments? What are you doing with that fund to try and get a best return possible? The wealthy are always looking for ways that they can earn a return that isn't just reliant on their man hours putting in. So even if they're running a business, they may have other people working for them that are also then generating a return for that business and increasing the profits that are going to go back to the owner. If they're investing in property, while it might have some kind of active investment management, but beyond that, most of it's going to be passive. They've got a tenant that's paying them rent and increasing their return, and hopefully the property's going up in value. If they're investing in the share market, they're looking for capital growth or dividend growth. All of these things are them putting their money into something, aiming to get a return that helps increase their wealth. Now this video coming up is me covering another wealth-based topic all about increasing your wealth. I thank you for watching. I'll talk to you again on the next one.